Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another USDA Loan Pro video quick tip. What happens if the home you want appears to be just out of budget? USDA loans can provide payment flexibility and increase debt ratios in certain cases. Now, today's video tip is critical for determining your qualifying price range and is excellent information for both buyers and realtors. Well then, what are we waiting for? Let's get started with the details. Just to clarify, please note that debt ratio waivers are not required on loan files that receive a GUS accept. Today's topic will cover any loan files that receive either a GUS refer with caution, or have to be manually downgraded by underwriting. USDA guidelines define that a debt ratio may be granted if all the following conditions are met. The principal and interest, taxes, and insurance, your PITI payment, is between 29% and 32% of your gross monthly qualifying income. This would be considered your housing expense and would also include any association fees if applicable. Your total debt ratio is between 41% and 44% of your gross monthly income. Credit scores of all applicants are 680 or greater, and at least one of the following compensating factors is identified. Proposed new PITI payment is equal to or less than the applicant's current verified housing expense for the past 12 months, as documented by a verification of rent form or 12 months of canceled rent checks. Accumulated savings of liquid assets available after closing of at least 3 months or greater PITI payments, as verified by either a verification of deposit form, 2 consecutive recent bank statements. Cash on hand is not acceptable. All employed applicants who have been continuously employed with their current primary employer for a minimum of 2 years, as documented by a verification of employment form. Please note that this is not applicable for self-employed applicants. A debt ratio waiver must be submitted to Rule Development in writing with the compensating factors listed to support the request. This is just another example of how a USDA loan can provide qualifying flexibility when the documentation supports the request. As you can tell, USDA rural home loans have guidelines that are very specific for this unique program. Always be certain that you are working with a mortgage professional that is well versed and understands the full potential of this unique program. As an approved USDA lender, we are experienced in these situations and are here to help guide you through the process. Qualifying for a USDA loan may seem difficult and overwhelming, but when you work with a lender that can maximize the potential of this unique program, it is a match that can help open the door to home ownership. My team is ready to help with your next pre-qualification, or if you just may need an expert second opinion. Just call or email to discuss your scenario and let us show you the Metroplex difference. I want everyone to make it a great day, and I look forward to seeing you right here for the next tip of the week.